Good morning, traders, investors, and market watchers. You're listening to Market Before the Bell, your daily U.S. pre-market briefing before Wall Street opens. It is Tuesday, July 21st, 2026. After 3 consecutive losing sessions, U.S. stock futures are attempting another rebound. Technology stocks are leading the recovery. Semiconductor shares are moving higher, and investors are preparing for major earnings from Alphabet, Tesla, and Intel later this week. But important risks remain in the background. Treasury yields are elevated, oil prices remain high, tariff headlines could create sudden volatility, and investors continue to monitor developments involving the United States and Iran. So grab your coffee, open your charts, and let's get ready for the opening bell. The overall market bias this morning is cautiously bullish. S&P 500 futures are trading approximately 0.4% higher. Nasdaq 100 futures are leading the rebound, gaining approximately 1.2 to 1.3%. Dow Jones futures are up around 0.3%. Russell 2000 futures are also moderately higher. The recovery is being driven primarily by semiconductor, memory chip, and artificial intelligence-related companies. The Nasdaq is showing the strongest early momentum, but this remains a rebound after several weak sessions. Buyers still need to prove that they can maintain control after regular trading begins. Now let's check the biggest pre-market movers. SanDisk is gaining approximately 7% as memory and semiconductor stocks continue recovering. Coherent is also up around 7%, supported by optimism surrounding artificial intelligence infrastructure demand. MaxLinear is gaining approximately 6% as investors return to selected chip sector names. Western Digital is up around 6%, extending the strength in memory-related stocks. Nebius Group is gaining approximately 7% after NVIDIA disclosed that it had increased its ownership stake in the company. That development is supporting broader enthusiasm for AI infrastructure companies. On the losing side, First Citizens Bank shares is falling approximately 38% following earnings-related weakness. That is a very large gap, so traders should expect significant volatility and should avoid chasing either direction without a clearly defined setup. Equifax is down approximately 11% after issuing a weak profit outlook. This morning's weakness is concentrated in financial companies with disappointing earnings, credit service businesses, and selected consumer-related names. Now let's review today's economic calendar. There are no major U.S. economic reports scheduled today. There are also no Federal Reserve speeches expected to have major market significance. That means the market's primary drivers are likely to be earnings results, semiconductor price action, treasury yields, crude oil, tariff developments, and geopolitical headlines. A light economic calendar does not necessarily mean a quiet trading session. With major earnings approaching and geopolitical risks still elevated, individual headlines could create sudden moves across the indexes. Now it's time for the earnings scoreboard. Before today's opening bell, investors are receiving results from 3M, General Motors, D.R. Horton, Novartis, Halliburton, and Northrop Grumman. These companies cover several important areas of the economy, including industrial activity, automobiles, housing, pharmaceuticals, energy services, and defense. General Motors may provide information about vehicle demand, pricing, incentives, and the company's electric vehicle strategy. D.R. Horton may provide an updated look at housing demand, mortgage rate pressure, buyer incentives, and home builder margins. Halliburton's results may offer insight into drilling activity and energy sector spending. Northrop Grumman could attract attention as defense stocks remain supported by geopolitical uncertainty. After today's closing bell, Interactive Brokers, Pegasystems, and Capital One are scheduled to report. Interactive Brokers may provide information about trading activity and customer growth. Pegasystems will be watched for enterprise software and artificial intelligence demand. Capital One may offer another look at consumer credit, loan performance, and spending trends, but the largest earnings reports are still ahead. On Wednesday, Alphabet and Tesla are scheduled to report. On Thursday, the spotlight shifts to Intel. Alphabet's results may influence artificial intelligence, cloud computing, online advertising, and the broader technology sector. Tesla's report could affect electric vehicle stocks, growth companies, and overall market risk appetite. Intel will be watched closely for semiconductor demand, manufacturing progress, artificial intelligence products, and competition across the chip industry. These reports may determine whether the current technology rebound develops into a stronger rally or fades again. Now let's move to the major market headlines. First, semiconductor shares are extending Monday's rebound. Second, NVIDIA increased its ownership stake in Nebius, helping lift artificial intelligence infrastructure stocks. Third, markets continue to monitor discussions involving a possible US-Iran ceasefire. Fourth, investors are preparing for earnings from Alphabet, Tesla, and Intel. And finally, tariff announcements remain another potential source of volatility. The market currently has a positive technology-led tone, but it remains highly sensitive to headlines. Let's check the macro dashboard. The 10-year U.S. Treasury yield is trading around 4.61%. That is still a difficult level for richly valued growth stocks. Higher yields can reduce the attractiveness of companies whose expected earnings are further into the future. The VX Volatility Index remains elevated and above its recent lows. The U.S. dollar index remains firm. Crude oil prices remain elevated following recent geopolitical volatility. Gold is moving higher in early trading. Higher Treasury yields and oil prices continue to create a challenging environment for technology stocks, even as semiconductors rebound this morning. A sudden rise in oil could increase inflation concerns and pressure consumer, transportation, and airline stocks. A sharp move higher in Treasury yields could also weaken the Nasdaq rebound. Looking at the sector picture, semiconductors are leading. Memory chip stocks are also showing strength. AI infrastructure companies are moving higher. Selected industrial companies may receive support following earnings. On the weaker side, financial companies with disappointing results are under pressure. Credit service businesses are lagging. Selected consumer names are also struggling. The key question is whether semiconductor leadership can spread to other areas of technology. For the artificial intelligence and semiconductor watchlist, keep NVIDIA, Advanced Micro Devices, Intel, Marvell Technology, Micron Technology, Western Digital, and SanDisk on your main screen. Watch whether these stocks maintain their gains during the opening hour. Sustained semiconductor strength would support the broader Nasdaq rebound. Look for stocks to hold above their opening range lows, maintain strong volume, and continue making higher highs. If semiconductor stocks lose their early gains and fall below the pre-market low, it could signal that the rebound is failing. Today's leveraged ETF watch list includes SOXL, SOXS, TQQQ, SQQQ, and NVDL. SOXL may benefit if the semiconductor rebound continues. SOXS could become attractive if chip stocks reverse lower. TQQQ tracks leveraged Nasdaq momentum. SQQQ may act as a hedge if technology weakens. NVDL should follow NVIDIA's price action closely. Treat the overnight and pre-market low as initial support. Treat the overnight and pre-market high as initial resistance. Unless you are following a clearly defined opening strategy, consider waiting 10 to 15 minutes after the opening bell before adding leveraged ETF exposure. Avoid chasing the first large move. Let the opening range develop and look for confirmation through price action and trading volume. Here is today's trading checklist. Mark the overnight high and overnight low before the open. Monitor Treasury yields and crude oil prices for sudden movements. Watch whether semiconductor leadership broadens to the rest of the technology sector. Avoid chasing early gaps. Determine your entry, stop loss, and profit target before entering a trade. Keep position sizes disciplined because major technology earnings are still ahead. And always respect your maximum daily loss. So here is your final setup for Tuesday, July 21st. U.S. stock futures are moving higher after 3 consecutive down sessions. The early market bias is cautiously bullish. Technology and semiconductor stocks are leading the rebound. SanDisk, Coherent, MaxLinear, Western Digital, and Nebius are among the notable pre-market gainers. First Citizens Bank shares and Equifax are under significant pressure following disappointing earnings developments. The biggest themes are semiconductor strength, elevated Treasury yields, oil prices, tariff headlines, US-Iran developments, and positioning ahead of Alphabet, Tesla, and Intel earnings. If semiconductor stocks hold their opening range and maintain strong volume, the Nasdaq rebound could continue. If the early gains fade, selling pressure may quickly return. Stay patient.
Watch the opening range. Respect your risk. Protect your capital. And remember, you do not need to predict the market. You need a plan for both directions. This briefing is provided for informational and educational purposes only. It is not financial advice. Always conduct your own research and trade according to your personal financial situation and risk tolerance. You've been listening to Market Before the Bell. I'm your morning market DJ, bringing you the biggest Wall Street stories before the opening bell. Have a focused and disciplined trading day, and I'll catch you on the next broadcast.